Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Sunday, September 29th, 2013. This week, S&P futures sold down below their multi-year high at 1727. The sell-off actually began the prior Friday and accelerated at Monday's open, with the S&P initially trading down to what had been support at the FOMC low at or near 1687. The decline paused during the mid-portion of the week following the pullback to 1684, the prior three-day consolidation high. The market had attempted to retrace back up into the supply cluster, initially encountered resistance up at 1701, and made a series of minor lower highs up at 1696, 1698. During Thursday's session, S&P futures traded up to 1696 in the overnight session, but sold off below the prior support level at 1684 during Friday's open. During this week's market development, the best opportunity to be a buyer had been during the pullbacks at or near 1688, 1686, and 1684. On Friday, following the overnight sell-off, when S&P futures breached support at 1684 and sold down at or near 1680, the market auctioned back up to what had been support and spent the majority of the trading range at or near 1686. For a more detailed look at Friday's market developments, we'll turn our analysis to the micro 5-tick range chart. Here we see the overnight high accompanied by the lack of buying interest, buy programs waning, followed by the high-frequency computerized initiated selling that auction price down at or near prior support just before Friday's open. At Friday's open, after trading up at or near 1686, the selling pressure continued, and the market auctioned down initially to 1681. On the initial retracement back to what had been support, the computerized trading programs ceased executing to the buy side, and price sold off again, trading down to 1680. The selling pressure ended when the market auctioned down to the 1680 price level, and thus there was no exponential decline, simply minor range extension. Buy programs were initiated at the low, and price auctioned back up at or near to what had been support earlier in the week. During the retracement back up to what had been support at or near 1687, 1686, there was no buying interest. The computerized trading programs ceased to execute to the buy side. Trade activity gradually decreased both in size and in intensity, and the S&P stalled and paused and gradually sold back down to 1682. Oddly, during the sell-off, the selling programs ended at 1682, and the S&P made a final attempt to auction back to 1686 into the close. At the open of Sunday's Globex session, following the announcements over the weekend of an increased likelihood of a government shutdown, S&P futures opened Sunday session gapping below Friday's close at 1686 and sold off down to the next support level that we've been discussing in our briefings at 1671. Coming into Monday's session, relative to Friday's close, the 1670 price level is the distance of a daily range below Friday's settlement. We would expect to see the market pause at the 1670 price level and make an attempt to auction back up at or near Friday's low. Should the threat of a government shutdown materialize, and specifically if the U.S. government were to go into default on its debt obligations, we would expect to see a major decline in the S&P 500, as well as the Dow and the Nasdaq. In the event that the House of Representatives comes to some intermediate solution and there is no government shutdown, the pullback at or near 1670 is likely to elicit support, and the market will attempt to auction back up into the upper supply cluster. We would still expect to see initial resistance at or near the 1686, 1687 price level. However, if the financial crisis is averted and there is no government shutdown, we could easily see S&P futures auction back up into last week's trading range and the short covering rally ensue, wherein the S&P would trade back up at or near 1700. That concludes our daily market recap for this Sunday, September 29th. If you would like to follow our real-time commentary, we invite you to visit us on the web at www.followthebots.com. Log on and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.